One broker charges you 5.83% to borrow money. Another charges 10%. That difference, on a $50,000 margin position, costs you over $2,000 per year. Gone. Vanished. Just like that. I spent 90 days testing Interactive Brokers, Charles Schwab, and Fidelity with real money on the line. I executed hundreds of trades across all three platforms. I tracked every fill, every slip, every frustrating moment when the platform froze during volatile markets. And what I discovered changed everything about how I think about day trading platforms. Here's what nobody tells you. The broker you choose doesn't just affect your commissions. It affects your fills, your margin costs, your actual ability to execute when markets move fast. Most day traders obsess over commission fees, which are basically zero everywhere now, while completely ignoring the factors that actually drain their accounts. So what did I actually find? Let me break it down. The platform that surprised me, the one that disappointed me, and the single broker I actually use for my real trading account today. First, some context on why this matters more than ever in 2025. The day trading landscape has shifted dramatically over the past 2 years. All three brokers now offer commission-free stock and ETF trades. Schwab absorbed TD Ameritrade and their legendary Thinkorswim platform, bringing decades of trading innovation under one roof. Fidelity launched their completely rebuilt Trader Plus platform in September 2025, and Interactive Brokers continues dominating the professional trader space with institutional-grade tools that hedge funds actually use. But commission-free trading created a dangerous trap, because when something appears free, you become the product. Most brokers now make money through payment for order flow. They sell your trades to market makers who profit from executing them. Where does that profit come from? Your fills getting slightly worse prices than you deserve. Let's start with what matters most for active day traders: execution quality and speed. Fidelity stands alone here. They're the only major broker that doesn't accept payment for order flow on commission-free trades. Think about that for a second. They're literally leaving money on the table to give you better fills. And the numbers prove it works spectacularly. So Fidelity saved investors over $1.94 billion in price improvement in 2024 alone. On a 1,000-share order, their execution practices saved an average of $24.30 compared to just $4.34 for the industry average. That's almost 6 times better price improvement than competitors. For active traders placing multiple orders daily, those savings compound into serious money over a year. We're talking real wealth impact that accumulates silently. Now, Interactive Brokers takes a completely different approach to the same problem. Their Pro account gives you direct market access and smart order routing across over 150 global markets. You're not paying for free trades with worse fills. You're paying small commissions for professional-grade execution. Their tiered pricing starts at 0.0035 cents per share with a minimum of 35 cents per order. For high-volume traders executing thousands of shares daily, this often works out better mathematically than free trades with worse fills. Schwab, with Thinkorswim, falls somewhere in the middle. The platform is incredibly powerful. Over 400 technical indicators, professional charting, and deep customization options. But they do accept payment for order flow, which can impact your fills during fast-moving volatile markets when every penny per share matters. Let me be direct here. If you're placing 20 trades per day and getting 2 cents worse per share on average, that's potentially hundreds of dollars evaporating monthly from suboptimal execution alone. This is not something most beginners think about when choosing a broker. Now let's talk about something that truly separates serious day traders from casual investors: margin rates. This is where Interactive Brokers absolutely dominates the competition. Their Pro account charges 5.83% on margin loans for accounts under $100,000. That rate drops even lower with larger balances, going down to 4.61% for substantial accounts. Schwab? Their base rate sits at 10% as of December 2025. Fidelity? 10.575% base rate. Want the math? On a $100,000 margin position, Interactive Brokers Pro charges roughly $5,830 annually in interest. At Schwab or Fidelity, you're paying over $10,000. That's a difference of more than $4,000 per year, just for using a different broker with identical trading activity. For traders regularly using margin, this single factor could be worth more than everything else combined. It's simply not close. But wait, there's an important catch here. Interactive Brokers offers two distinct account types with very different economics. IBKR Lite gives you commission-free trades but charges 6.83% on margin, a full percentage point higher than Pro. And critically, Lite uses payment for order flow, which defeats the execution quality advantage entirely. If you're serious about trading, skip Lite completely and go straight to Pro. Now let's get into the actual platforms themselves, because this is where things get genuinely interesting for day traders. Interactive Brokers Trader Workstation is an absolute beast for professional traders. Direct access to over 100 order types and algorithmic trading templates. Bracket orders, trailing stops, one cancels, other orders, and conditional orders that trigger based on specific market conditions. Their smart routing technology scans multiple venues to find optimal execution prices. API connectivity lets you build custom strategies using Python, Excel, MATLAB, or their proprietary language. Pre-built algorithmic templates like VWAP, volume-weighted average price, and TWAP, time-weighted average price, help execute large orders without moving the market against you. For institutional-style trading, nothing else comes close to these capabilities. But here's the honest truth. Trader Workstation has a brutal learning curve that frustrates many new users. The interface feels dated compared to modern platforms. Setting up hotkeys is unnecessarily confusing because global commands and Windows-specific commands are kept completely separate. You might create a buy hotkey globally, only to find it doesn't work until you recreate it in the Level 2 window. And entering ticker symbols requires clicking a tiny box in the corner. Not exactly ideal when markets are moving fast. You also can't create hotkeys to sell specific percentages of positions like 50% or 25%. Instead, you have to manually enter exact share counts every single time. During fast momentum plays, that delay costs real money. Some serious traders solve this frustration by connecting Interactive Brokers' execution to third-party platforms like DS Trader. You get vastly better hotkeys and a modern interface while keeping IBKR's ultra-low margin rates and quality execution. Definitely worth considering. One bright spot: the charts in Trader Workstation are surprisingly good. They use a white-labeled version of TradingView, giving you sub-minute timeframes, custom indicators, and reliable visuals. If basic charting meets your needs, TWS holds up reasonably well against competitors. Schwab's Thinkorswim is where most active retail traders end up. And honestly, for good reason. The charting capabilities are genuinely best in class among consumer platforms. ThinkScript lets you build custom indicators and automate strategies without being a professional programmer. The earnings analysis tool provides options insights that competitors simply don't match. And unlike Interactive Brokers, it's completely free for any Schwab account holder with zero minimum balance. The Thinkorswim desktop platform feels notably smoother than Trader Workstation during active trading sessions. Multi-chart layouts stay responsive even when streaming heavy real-time data across multiple monitors. The Stock Hacker tool scans for setups matching your exact custom criteria. And paper trading with their Paper Money Simulator lets you test strategies completely risk-free, using real market data before risking actual capital. Schwab also offers 24/5 trading on over 1,100 stocks and ETFs, meaning you can react to overnight news before most traders even wake up. For earnings plays and breaking news events, that's a legitimate competitive edge most platforms don't provide. The integration of TD Ameritrade's technology brought massive improvements to Schwab's offering. Over 400 technical studies available, 22 drawing tools, 8 different Fibonacci tools for advanced technical analysis. TradeFlash alerts you instantly when analyst upgrades happen or block trades execute. Schwab now processes over 7 million daily average trades, more than any other publicly traded financial services firm. Fidelity's Active Trader Pro is Functional but limited. It's free. It got significantly better with the Trader Plus rebuild in September 2025. And the integration across desktop, web, and mobile is seamless. Start a trade on one device, finish it on another without losing your work. The new platform syncs your watch lists, charts, and layouts across all your devices automatically. But compared to Thinkorswim, the charting feels notably basic. There are no hotkeys that meaningfully speed up execution during fast markets. Level 2, data on OTC stocks is nearly non-existent. And there's no float-size data in the quote tool, which makes identifying momentum opportunities significantly harder for scalpers and momentum traders. Fidelity also struggles with streaming quotes, a severe problem when you need to see exactly where a stock stands in rapidly moving markets. Some traders report the platform freezes during high volatility, precisely when reliable execution matters most. Here's the thing, though. Fidelity's exceptional execution quality partially compensates for the weaker platform features. If you're placing fewer but larger trades rather than rapidly scalping small moves, those superior fills accumulate more value than fancy hotkeys ever would. Let me address the pattern day trader rule because it affects everyone seriously testing these platforms. All three brokers require $25,000 minimum equity if you're classified as a pattern day trader, meaning 4 or more day trades within 5 business days. This is a FINRA rule, not broker-specific, but how brokers handle accounts that fall below this threshold differs significantly and impacts your trading flexibility dramatically. Some brokers immediately restrict you to closing transactions only, essentially freezing your ability to open any new positions until you deposit more funds. Schwab actually filed formal comments with FINRA in February 2025, recommending substantial changes to these rules, arguing they're outdated relics that hurt retail traders without meaningfully protecting anyone from actual risk. Will that lead to regulatory changes? Uncertain, but definitely worth watching. Now, who should actually use each platform? Let me be completely specific based on my 90 days of testing. If you're trading high volume with significant margin usage, Interactive Brokers Pro is your answer. Period. No one touches their margin rates for active traders. The execution quality is institutional grade. And despite the steep learning curve, Trader Workstation provides every tool a professional needs. The savings on margin interest alone justify switching for serious traders making consistent use of borrowed capital. If you're focused heavily on technical analysis, option strategies, or simply prefer an intuitive modern platform, Schwab with Thinkorswim should be your choice. The charting and analysis tools are simply unmatched for retail traders. Think script customization is powerful without requiring programming expertise. The 24/5 extended trading gives you flexibility most platforms simply don't offer. If execution quality matters most and you don't use significant margin, Fidelity wins this category handily. They're the only commission-free broker not selling your order flow to market makers. That price improvement compounds significantly over hundreds of trades annually. For swing traders or position traders placing fewer but larger orders, superior fills matter enormously. Here's what I actually do. And this approach might surprise you. I maintain accounts at 2 brokers simultaneously. Interactive Brokers handles my active trading account where I'm regularly using margin and executing frequently throughout the day. The margin rate savings are simply too significant to ignore when you're borrowing consistently. But I keep my long-term holdings and retirement account at Fidelity for superior execution on larger position trades and their excellent research tools. This isn't about loyalty to any particular platform. It's about using the right tool for each specific job. Most traders don't realize you can, and probably should, maintain accounts at multiple brokers simultaneously. The friction of having 2 accounts is minimal compared to the thousands you save annually by optimizing for each specific use case. Let me leave you with the calculation that actually matters. Take your average margin balance, multiply by the rate difference between brokers. Add your estimated price improvement difference across your annual trading volume. What does that total represent? Exactly what your broker choice costs or saves you every single year. For a trader using $50,000 in margin and placing 500 trades annually, The difference between optimal and suboptimal broker choice easily exceeds $3,000. Some active traders leave 5 figures on the table every year without even realizing it. The broker marketing departments want you focused on fancy app interfaces and commission-free trade advertisements. They do not want you calculating the actual math on margin rates and execution quality. Now, you understand exactly what they'd rather you ignore. Your likes and subscriptions directly shape which financial deep dives I tackle next. Here's the bottom line. For pure day trading with substantial margin usage, Interactive Brokers Pro remains the professional choice despite its platform quirks. For technical analysis, excellence, and a superior platform experience, Thinkorswim at Schwab delivers genuine value that justifies serious consideration. For execution quality without hidden costs eating your returns, Fidelity stands alone among commission-free brokers. Choose based on your actual trading style and margin needs, not marketing hype or flashy interface screenshots. The difference in your account balance over 12 months will prove exactly why this decision matters far more than most traders ever realize.